evening, ladies and gentlemen. Welcome back to Walk the Block, where we're navigating digital finance all together. Well, to say the navigation has not been going smoothly lately is maybe a bit of an understatement, but we're here to discuss everything going on surrounding that and run through a few articles, have a little discussion, and more importantly, just hang out with you guys, answer all the questions that you might have out there, which, by the way, we already got one in the chat already. So if you have any more, please throw them in there, and we will try to answer as many as we possibly can. Again, hello. I'm Zenith. I'm your host for the evening, and I'm joined by an excellent cast of characters here tonight. Up first, we got Tracker. How you doing, buddy?
Doing well, man. We're all still alive. We're all still here. Just weathering the storm like everybody else. And we'll dive into the max pain that we were talking about, how they keep, TradFi's here and they're here to stay, and we better get used to some of this manipulation and blind sides and everything else. And the people that I feel like that are getting a little cocky, thinking that they call the top and all, don't be surprised if we get a whiplash in the other direction. So I'm excited, man. Always looking forward to Mondays.
Always a good time. And we have our third chair in the house tonight, Dace. How's it going there, brother?
I'm well, sir. I'm keeping busy. It's a good time to focus on building and focus on growing your pursuits outside of crypto, because crypto is incredibly volatile in the short term. So I'm good. Keeping busy.
That it is. That it definitely is. Being busy is always a good thing. It means you got work to do. And hey, job's not done. Got to get after it. Alrighty, gentlemen, I do have just a quick hodgepodge of tweets or X's, posts, whatever we're calling them nowadays, that I wanted to share with you guys. So just get some quick hot takes going on here. Up first, Jim Cramer says we have entered the bear market territory. There you go. It's all over according to Jim Cramer. So for anyone out there that doesn't get the joke, the inverse Cramer's theory, or inverse Cramer law, if you will, which is that this man is shockingly wrong, shockingly consistently as well. So he says it's bad, which might be good. Do you guys think he might be the broken clock that's right twice a day on this one, or we're just used to Jim being wrong as always?
I think this one might take a little time to play out the inverse Cramer law. Depends on what happens between now and the end of the year as it pertains to Fed rate cuts. The Fed's also been meeting with banks behind closed doors all week about liquidity issues, is some of the reports coming out. And so, yeah, we'll see how long his streak holds up, or like you said, if he's going to have this one right or not. I know we're going to talk about Bitcoin's chart patterns and chart movements and things, but it's a great intro to the topic.
Yeah, that's for sure. I do have a few more I want to get through. I got a fun one next, though. Slightly relevant, but for slightly different reasons. Coming to us from the Richard Hart, or Richard Hart Win. He says, turns out people are real sensitive during 40% dips. Well, the market hasn't dipped 40% for Bitcoin, but for Pulse Chain side of the house, there has been a small dip after the announcement of the Proof X sacrifice. And I had a really good discussion with Fast Abdul. He hopped on DJ Roundtable last night for a very unplanned third hour of the show, but we mentioned it and he was like, I will be right there. So he hopped on, talked about everything going on in there, and just let folks know, like, yes, if you want to get in on the Proof X sacrifice, there is effectively no point to selling your core tokens to get in on that, because you're pretty much realizing losses to get in on a new project that is a risk potentially as well. So look, Richard was saying this is about the Pulse Chain markets. I think this also very much applies to the Bitcoin markets overall, because we're currently sitting at about 27.8% dip from the last month, effectively. And yeah, as we showed with the first one there, a lot of people are trying to say it's all over. It's all going to zero. We already missed the boat. Sorry, everyone's late. Should have sold. No more.
As far as the sacrifice goes, I know what he said. He said that he's looking for outsiders to come in, basically, because this is for everybody to sacrifice who's not necessarily in the ecosystem. I'll push back, and unless he's got something else, and I don't know the plan. I can't fathom what he's got planned. But if you would have just simply allowed people to sacrifice, whether they want to sacrifice their core coins or outside funds, then you let the people do that. You let the market decide how they're going to implement that. Because what in turn, if people, that's great and all, like, you shouldn't be sacrificing your core coins, but if you don't have any more dry powder and you want to be participating in the sacrifice, you had to sell your core coins. And this is what caused basically the sell-off in the core coins. So I don't think it was a good idea. I just don't. I think it was a bad idea. I'll call it what it is, a bad call. I don't think they should have done it. Should have allowed you to sacrifice what you saw fit, and then that would have made things a lot easier. I get he's looking to try to bring more liquidity into the ecosystem externally, but all those people who sacrificed that sold core coins, they just recycled. That's all they did. They sold their stuff off, went on to another chain, bought that, and then sacrificed. So I don't necessarily know if that's the outcome that he was expecting. Maybe I'm sure he planned this or not. I don't know, but I didn't think it was a good move. I just didn't. Because
Right. Go ahead.
well, the whole ecosystem, man. How much pain do you want to bring? Pain.
So let me push back a little. I have a question for you.
All right.
Do you think that it is more likely that we had a 40% sell-off on the day of the SAC announcement because people are selling to go sacrifice for ProveX, or do you think that it is more likely that they sold because they feel like you feel, because that you feel like, okay, you're launching this thing, the prices haven't moved, I'm cutting bait, right? You're moving on to the next thing, you haven't delivered, or they feel like he hasn't delivered. To me, when I look at the amount sacrificed in the ProveX sacrifice wallet, right? You can go look. It's not the amount that we sold off. You know what I'm saying? And I think that it is more about a loss of confidence from big holders on that announcement that caused the sell down. I think you're drawing a direct correlation where there may not be one. That's my question is, do you think that's that direct? I think it was a big player who got frustrated and clipped out. That's me.
I think it's both. I think it's both.
It's easy to say.
I think
but again, if you look at the numbers of the liquidity that was taken out minus the the ProveX sacrifice, like he's only got less than $2 million in there or something, versus the 600 million for the sacrifice. So it's I don't know, man. It's a tough sell for me to say. People sold off cores. I'm sure some people did. I'm sure it's not zero, but I think more people probably sold off because they were tired of it, or sold off because they were shaken out than did for the ProveX stack. That would be my pushback.
Well, let me ask you this: how much new capital came in from outside the ecosystem?
Well, it's hard to tell, because it's easier to tell than if you could do it with sacrificed coins, right? If we pull it up, we at least know that somebody had to take that effort to not have their money in RH products and then sacrifice it. Thank you, Zia.
You're welcome. Currently sitting at just shy of $2 million. The good question there, though, is where did it come from? Was it money that was funneled out to the other blockchains and then sacrificed in? Or is this purely $2 million of outside capital coming in? Unless we do some really hardcore sleuthing, it's going to be hard to figure that one out. But I understand both of the arguments for sure.
I don't think it would be outside new money coming in, because at this point, it's got such a tainted reputation right now. I would be shocked if somebody was sitting on the sideline like, oh, Richard Hart's going to do a sacrifice. I mean, not even part of the ecosystem. Oh yeah, sure, I'll jump in. I just find that hard to believe. But like Dace is saying, more has sold off than that's been given to the sacrifice. So based on what he's saying, the numbers, then more people are getting fed up. So maybe this is so is it safe to say, Dace, you think this is like the really hard final shakeout to get everybody out who's just not willing to stick around? Because I mean, it's been what, 3-4 years of just pain.
So I think yes, it was a shakeout. I'm not ever going to say it's the final shakeout until the number's up. So let's make that clear.
No,
but I do think that I think Richard's somebody who plans ahead. And I think that it's likely in my mind that this was a date on the calendar that a thing was going to launch. And did he put this date on the calendar to launch this thing because he thought he might have some momentum going? Yeah. I think we all expected that right now the market would be performing. If you look at previous cycles on the U.S. manufacturing PMI chart, which is a great indicator of momentum and speculation across the U.S. and also, lockstep with the quote-unquote alt seasons, or the big crypto alt seasons that we all hold alts for. That has been delayed and muted as we have digested all of the debasement of the currency that happened in 2021 from COVID. And so over the past 4 to 5 years, I don't think it's any accident that after the hangover, like we're experiencing a 4-year hangover post-COVID money printing. Sorry, YouTube. Whatever happened in 20. And I think speculation, interest rates, lots of things reflect that money printing, and people not being able to stomach the speculation is another aspect of that angle. And so I think it trickles all the way down, right? Lots of people who are timing out the cycle would say that the cycle's over right now, or was over, whatever, a month ago for BTC. Let's be specific. But yeah, so I say that to say I think we may have hit a date on the calendar where he planned to launch a new thing, and he's not gonna. If he sees no reason to change that plan, yeah, he's gonna do what he can. Maybe he would have accepted the cores if it were higher, right? If Ethereum was higher and he or some benevolent entity rolled the sacrificed Ethereum into the chain, pushing up the numbers, and then he's taking a sacrifice while we're at all-time highs for Pulse Chain and Hex, maybe he does accept those funds. I think that's a strategic game time decision he can make when he gets up to the event of the launch, but that doesn't mean that he doesn't have the launch on the calendar. So something to think about.
Well, he's still sitting on a massive amount of money who could easily pump in liquidity into the Pulse Chain ecosystem. But my question,
correct, but he bought it $3,700, and he's not going to sell at a loss.
No. Yeah, I agree with that. It's to be seen. I just don't know the reason. I mean, I still wouldn't have I would have still allowed to sacrifice both, because then if people wanted to sacrifice, they could have done their coins, even though that would have been at a real low price. So I don't know how much that would have done anything, but
I think it would have been worse for the ecosystem, personally. It's a hot take.
Well, they could burn the supply.
Well, yeah, but like the supply is burned. I think the supply is burned. The customers are burned. I think everybody's pretty burned about it. And so I think if you let them sacrifice the coins, I think you actually probably have longer. Well, he tweeted. Our friend Brendan over at Degen Roundtable had a astute observation about one of his other posts where he said, "Do you like to rip a Band-Aid off fast or slow?"
Right.
He polled his followers, and they voted fast. And so, yeah, I think we probably would have bled 40% over the whole time of the sacrifice, or we bleed 40% in a day when he says you can't stick them in versus you can stick them in, right? So that's kind of my take on the whole bit.
I know, man. We're sitting here waiting patiently.
Yeah, only time will tell, but it doesn't mean that sitting here and waiting for it to happen is going to be any less painful. So there you go.
So it's one of those it is what it is at this point. It's kind of the damage. We're there. We're just waiting.
It's an interesting time to speculate, right? I mean, there are people out there, like I said, that are speculating that 4-year cycle is behind us. Bitcoin and Ethereum have topped. That's a lot of people are making those noises right now. If you zoom out and look at the different dips throughout the run of each 4-year cycle, this is a normal sized dip, right? That Bitcoin has recovered from before. There in some ways, and in some ways you can find technical data to say no, this time is more catastrophic. But even at 21 cycle, man, there's a couple of big indicators. The weekly super trend being one that we flipped red on the weekly super trend at 21 and then recovered it after multiple weeks in the red. So yeah, look, indicators and past looking indicators are made to be broken. If there's anything, the market will evolve. It will show you something you haven't seen before. So yeah, it's a wild thing to watch.
That it is. But by the way, you did kind of read my mind there, saying that people are hemming and hawing about whether the 4-year cycle is dead or not, and if the top is in. But guess what? That was the next one I had pulled up here. A lot of people coming in with their own takes, pulling up the classic psychology of a market cycle. But this is the one in particular you really hit on the head. People are out here saying it's going to be the first 5-year cycle. Everything took longer this time. And saying, the 4-year bears think that we're already in complacency. 4-year bulls think we're in belief. But this guy's saying, no, we're still down here in disbelief. And I'm like, that's a hot take, all right. Speaking of more hot takes, flash this one earlier. Bitcoin at 126 was the euphoria. It's obvious in hindsight. And then we even have our friend Sami coming in here. Says, where do you think we are in the Wall Street cycle now? Taiki believes it's denial. This guy's saying, yep, we are now even further down in the denial phase. So look, the takes are spread out pretty widely, I will say. I don't know if any single person has I'm not seeing an aggregation around any single thing. I still see the camps that are largely parked exactly where they have been, and I don't anticipate them trying to change anytime soon, unless it takes probably 3 or 6 months to confirm everyone's theories about what was true and what's not true. So this is like, look, Tracker, exactly as you said, we're in the waiting game right now. It's not a fun waiting game for the Prove X sacrifice stuff. Well, we're also in the waiting game for the macro markets too. And this is what I'm seeing overall. Just a lot of confusion, a lot of people trying to figure out what the heck is going on. Was it 126? Is that the beginning? What are we doing?
Yeah, look, I
Well,
think something
you
Trekker
guys-
mentioned backstage before we started, which was, looking at the momentum of the traditional stock market and the S&P chart, and saying that it's overheated is tough. Is an easy observation until you turn around and look at the M2 money supply chart, and you look at how much money they've printed since 21. Like I mentioned earlier, Tracker, you made a great point earlier. In terms of the S&P may not be overheated when you weigh it against just the total number of dollars in the system.
Let me ask you guys a question. Are you more bullish or bearish now?
On what specifically? S&P, gold, Bitcoin, hex?
We'll say just crypto in general. And we can do Bitcoin and Ethereum. Are you guys more bullish or bearish now?
My answer might change 7 days from now or 6 days when we get a new weekly close candle on Sunday. But as it stands right now, I'd probably go 50-50 leaning bullish, though, which is that are we seeing some irregularities in the cycle? Are we seeing some top indicators come in? Yes. At the same time, though, it's what we've been talking about for like the last 3-4 weeks, which is that everything else just seems so lined up to be exactly what we've been asking for multiple years now. And then the price just isn't going the way that we want it to right now. And it's still down less than 30%, which, look, we've talked about it before. I think even in the 2017 cycle alone, it like had multiple 30% drops on the way up during its parabolic phase. The big thing I'm going to point to about this cycle that's different, though, is that we're not in a parabolic phase. We have not really seen a parabolic phase. The one time when you could have really argued we went parabolic was at the end of 2024 after the election. There was that like month or two rally starting in early November where we spent all summer chopping sideways, even got down to like $56,000 Bitcoin. And then we just pumped all the way up to the mid 90s. And we stayed there for a bit. And then we kept going. We hit 100, we hit 108, hit 110. And then, tariff stuff happened. But the overall picture for me is that all the indicators are lining up for the things that make asset prices go up. I think that there's a discussion to be had about the overall like business cycle and how things are going pretty much ever since like 2023, 22 even, about whether or not like the charts are actually diverging, whether it's like the job fulfillment versus S&P 500 or it's a gold versus traditional markets, that kind of stuff. I'm still leaning bullish. I really am.
Dace, what's your thoughts, man?
Yeah, look, I mean, the government has announced that they're going to tokenize the stock market. I mean, I'm bullish, I could be wrong, but like, I think when I look at the stock market and I look at the crypto market caps, one has a lot more room to grow, particularly if they're saying we're going to put this one in that one. I mean, that's as simple as I can boil it down.
That's fair.
So you could also make the case that we did go a little parabolic during Q1 of 2024. A lot of altcoins pumped hard in March. There was actually back then there was a really nice moves, certainly in the GameFi sectors and a couple other areas. They actually had a nice little run. Not a lot, but you had some that were pulling off, 6Xs, 7Xs. There were some really nice ones in there. A couple.
No, it's a very fair point.
Look, let me counter with like if the PMI was at 55 or up, those 6Xs are more like 36Xs, or they look more like the alt season numbers we've seen in previous cycles. It's just we're in an environment where liquidity is not as available, and so the speculative runs don't run as hard.
Right. So let's look at it. Like you guys said, the government's teeing it up. So rate cuts are coming. A new replacement of Jerome Powell's coming. It's going to be they're going to be more aggressive when he gets in. I know they're going to be. They'll throw money at this. They'll do whatever they want at this thing to really pump it. Because we've already talked about this numerous times, restructuring debt, all these things. And the manufacturing indexes and all have still been so suppressed for so long. They can't stay down long forever. Eventually they go up. Anytime you think things will just stay down forever, it's typically when things start to go back up. So those have been suppressed. TradFi's come in, manipulated the crypto markets outside of Bitcoin, maybe Solana and a few other ones. They've had some nice pumps like XRP and so forth. But for the overall market, it's been pretty suppressed. Yet here we are, BlackRock, Larry Fink, and all the big players are going to tokenize everything onto that. Now, when we say everything, we're talking the stock markets, real estate. They want to put it all on there. And like I said, we brought this up before. People think real estate, come on, really? There are companies out there already doing this on the Avalanche network that happened. God, we covered that story, what, 6 months ago, 7 months ago in New Jersey? So it's all coming. This is all coming quickly. And I don't think people, so you have all of these narratives coming that's going to show expansion. And I think the video you put out there today, Dace, in our members chat, that was huge because that's something I don't hear anybody talking about. Once again, here our friend Tom Lee is coming out, and they asked him the question, like, do you think we're but he thinks that Ethereum is pretty much getting close to the very bottom because he speculated that people are talking about if they're going to tokenize assets, and there currently are assets on the actual Ethereum network, and I think he stated that it'd be about 50% of its value, then Ethereum is pretty much bottom out just on the assets that are tokenized on the Ethereum network as today. I don't hear a lot of people talking about that, man. I don't hear anybody really talking about that. So I'd be curious, what are all the assets that are currently tokenized on Ethereum network and how much more is coming? Because there is a value to that. That's going to be, because I mean, and people are like, well, you can't say that the assets on the Ethereum, you can do it. Well, sure you can, because it's part of the network. It's part of the ecosystem. It's part of and Ethereum gets transaction fees for all those transactions. They're going to, I mean, all of that's coming. We haven't even started. Now, in the interim, do we have a pullback? Is there more pain to come? Something like that could absolutely happen. But this is what TradFi is looking at. Now, unfortunately for them, they have piles of cash and lots of investors, and they're gonna spin this to be basically like the AI of finance 2.0 for all the main people out there in TradFi investors. So they're going to keep throwing money at this, and they're going to keep accumulating. That's what we keep seeing. They're accumulating while others are dumping, and this is what's going to keep piling up. So I've said this before. I've made mistakes in the past. I had invested in Facebook when it was under $20. I was invested when Google's first IPO launched. I was invested in all these companies. And the thing that I always regretted was I got out way too early. And I'm just going to sit tight. I have no problem sitting and holding, whether that's through various investment vehicles, whether it's actually the Ethereum asset itself, which I would recommend over everything. But if you have 401k and retirement funds, being in those ETFs are great vehicles to be into. If you can't get 100% exposures directly to it, there are other ways to get assets to it. But I mean, if your time horizon's 15, 20 years, 30, 40 years, whatever it is, man, I mean, this is the beginning of what the internet was essentially at the very beginning. And you can just go back and look at what these tech companies have done. Like people were talking about, dot-com bubble blew up in everyone's face, just like AI is going to blow up in everyone's face. It is going to blow up in everyone's face because people throw money at all this stuff, chasing the new technology. And then once it blows up in everyone's face, then they figure out how to actually implement it and use it for their companies. Then they start to go up, and that will happen all over again. Absolutely will. But as we've learned from really smart people, bubbles don't pop when money is becoming cheaper to use. And then when people have lots of money, they're willing to spend and invest. And with the rate cuts, that's going to feed into that. And we ain't even talking about quantitative easing. If they start doing anything like that, quantitative easing, money printer, stuff like that, yeah, you're going to see people spending money like they're drunk, basically.
The tracker, I think you said it well. Like if we look at just Pax Gold, right, which is an Ethereum-based token that is backed by gold in real life. If we look at USDC, which is redeemable with US dollars, just the market cap, and the valuations of those things are that exist on the Ethereum chain, right? They give it that inherent value that you're talking about. Referencing Tom Lee saying that 50% of the value of the total assets locked on the chain is sort of a bottom. For the evaluation of the L1 of Ethereum of itself, as it fluctuates, that historically that's been a bottom zone for it. I think that's a reason to be, that combined with what we both pointed out, that the U.S. government has explicitly stated that they're interested in moving the stock market on chain. It, if we're gonna value the coin according to the assets that are locked up on its chain, and they move all of the $150 trillion stock market on chain, well, that's math that can be done, and that's not possible on Bitcoin, by the way, right? You can't program Bitcoin to do the monetary functions that Ethereum can do. So yeah, I remain bullish.
I like it. By the way, I know you mentioned one of our favorite things to soapbox about, which is the AI bubble. But I had another thought there, which is that if we're looking at things that were kind of maybe like ahead of their time, or we saw they had their time in the day, then they crashed before they got useful, I think AI tokens inside of the crypto space also kind of fit that narrative pretty well. I think we saw a pretty good run, definitely earlier back in like a March April timeframe of 2024. Now we also saw a good bit of traction earlier on in the cycle surrounding those, but those things have just died out in my opinion. Like I don't even know anybody that wants to even talk about them like out on the air, because I just don't think nobody cares anymore, and the money is also just dried up from them entirely. So it's no AI bubble bursting, but it's just interesting when you make the analogy of like, yeah, the internet era, it was a bubble at a time for sure, the dot-com bubble, but at the same time it's like the internet was so transformative, and AI definitely has one of those powers. And even inside of our little crypto space, AI tokens were a thing for a while, until a lot of people realized they were basically just chat GPT on top of a token instead of like actually innovating. So even then though, the ones that were actually innovating, those things have just been bleeding, and I have not heard a sound out of them.
So based on the actual tokenized assets on the Ethereum blockchain, it's approximately about $201 billion worth of tokenized assets on the Ethereum network. Ethereum's at $360 billion. So that's roughly that 50% mark that he was talking about. So yeah, we're pretty much, if based on that, we're pretty close to the bottoming of Ethereum. Now, could people still sell off and go down? Sure. I think investors are going to quickly snatch it up though, especially these institutions that are looking much, much longer term. They're not looking at a couple of years. They're looking at decades.
That's true. And by the way, you mentioned earlier that people are saying it's Ethereum's bottom. You're like, okay, well, why is everyone selling then? Not everybody. We pull up our old favorite website, Ethereum Strategic Reserve Tracker. You can see Bitmine, they are still making purchases to this day. Granted, they haven't made one in a little over a week at this point, but look at that, November 7th, October 31st, October 25th. They are still climbing. 30-day change up 15%. Like, and again, it's $300 million at a time as well. So
keep this in mind, Tom. Yeah, just keep this in mind. Tom Lee, I know everybody keeps bringing him up, but he's a smart guy, man. I was following him for years, even before he started doing this whole Ethereum Foundation. When he was typically, when he spoke, everybody listens. That's just what it is. There's other smart guys that are out there. I mean, the Kathy Woods and the there's a lot of smart guys on Wall Street that have a really solid track record, but he's typically someone who's just speaking. People tend to listen. Now, could he be wrong? He could be wrong, but he was telling people in 2017 to be buying Bitcoin. If you were buying Bitcoin in 2017, you did really well. And he's thinking, in his mind, there's much more growth opportunity in Ethereum than there is in Bitcoin currently. So it's one of those, you've rode this Bitcoin. It's his asset, his investors. So that's why they're looking at it. And it's for the reasons we've already said, because you can have smart contracts, because you can tokenize all these things on the network. You can't do that with Bitcoin. Bitcoin is basically the world asset that everybody can use, that is a hedge against inflation. This is why I think you saw Bitcoin do so well. I get Solana was in that category, but I think this is why Bitcoin was running so well, because Bitcoin wasn't really being treated like a risk on asset. I think it's the one of all the crypto that's not really a risk on asset. I know in hindsight it could be, but I think why would it ran so long for so long? Because it did, while everything else was suppressed or really wasn't ever going up in value at all. So it's kind of funny if you look at Bitcoin and look at gold. I mean, Bitcoin's outperformed gold over the last 2-3 years, but Bitcoin was moving when gold was moving. I don't know. I think it's the world getting behind Bitcoin as another opportunity to be in something else that can hedge against US dollar. And I think the other assets are much more speculative or risk on assets that haven't moved because, like the thing that we always talk about, and Dace has been all over about the ISM, the manufacturing rate, nothing, risk on assets aren't going to become an appetite until that goes up. The rate cuts are the beginning of that. Rate cuts kick in. Typically it takes, 4 or 5 months for those rate cuts to really start trickling in. And the reason why that works is the big guys get the rate cuts early. They take that money and they start to invest in other areas, and it trickles down into the rest of the economy throughout. And that's typically how it goes. But it takes time for those lower rates to really start kicking in and trickling down throughout the markets. And then when those money starts trickling down to various players, they will start to spend more, and they'll do that as well. And of course, if you add that a combination with, TradFi running so much, having these big winners, now we can rotate out of some of these stocks or things that they were already in, assets that done very well, and rotate into higher, riskier assets that have much more potential to upside.
Did we lose Tracker?
No, I'm here. That was basically that was it. That's all I'm stating is like, you just got to kind of, just saying, you just got to connect all the dots, man, all the things that are moving. And the bluff is this.
I think we just lost you.
We did lose. You said the bluff is this, and then you dropped. Say the bluff again from the top, Tracker, please, sir.
Sorry, the timing was too perfect on that.
Sorry. The bluff is we are in an environment that is going to make money. There's going to be more supply of money for people to do more aggressive spending. And that's what you will see with the rate cuts being the beginning of that phase. It will start to trickle in, and then the manufacturing should start to be going back up because people will start to spend more while they have more liquid to actually put towards things. I'm still in that camp, heavily in that camp, and I think Ethereum is so undervalued right now because of all the things we've already talked about.
Yeah, I mean, Ethereum's definitely been the weird play this cycle, just with all the like the massive short that you guys were following there for the longest time. Then we had a killer rally. Now the overall market's kind of cooling off a little bit, so it's cooling off too. Now we're looking at like what, $3,000 Ethereum as of today. Those are some pretty dang good prices historically when it comes to Ethereum. Granted, it wasn't like the sub 2,000 that we got back in April and whatnot, but at the same time, yeah, in the world where the altcoins have been bleeding and the alt caps are trying to keep pace with Bitcoin, and then Bitcoin looks like it might have already made all its gains. Start looking at the stuff that's like Ethereum and the other large cap coins, like pretty much everything that's above 20 on the market cap list. I think that those are probably some of the more interesting things to start considering right now until we start getting indicators of like a full on altcoin season if we get one.
Well, I keep seeing smart money keeps buying up assets right now. I mean, they're buying. Tom Lee's buying. Cathie Wood's buying. Berkshire and Hathaway, they've been buying. Warren Buffett's area, they're buying up. They've been buying a huge function of Google. They just stepped in and bought big shares of United Healthcare about a month ago. Well. So they're looking for value, and when you get these pullbacks, they're going to be buying value. They're stepping in and buying stuff. So
that's true.
I know true. On the other side of that coin, just today, Peter Thiel unloaded like 70% of his total NVIDIA position or something wild. So yeah, you've got some big buyers and sellers. There's people making moves, no doubt about it, in both directions.
Yeah, both directions is key for it, even in the macro sphere. Tracker sent out a video early today, and a guy was talking about, there are some people out there, some big players that are actually not getting in on the AI bubble, on the AI stocks. They're actually heavily betting against them. So we're seeing it stack up on both sides, similar to kind of the 4-year discussion that we have in crypto, which is people are swearing on their mother's grave that the 4-year cycle is dead, and other people are saying, no, it's just going to run a little bit longer this time. And then you also have the other guys in the back of the room shouting that we're going to an 8-year cycle or something. It just, like, I opened up with this. It seems like confusion or just disagreement about trajectory is kind of the name of the game right now, especially over the last month when it comes to both the crypto side of the house and the macro side of the house.
Correct. And that was brought to you by TradFi.
Thanks, TradFi. Really
they're
appreciate that.
they're the ones that are muddying up the waters. This is what they do. They are going to frustrate the hell out of everybody, and they're going to end up accumulating as much as they can. And this is what you keep seeing. They're going to keep doing this.
Well, yeah, they accumulate as much as they can. The key is while they can. That's why we're always talking about the ISM, and we're talking about interest rates, and we're talking about government printing more money, right? And money becoming cheaper and more available. Because when the money becomes cheaper and more available, it will be advantageous for the big players who hold a lot of it to have it move up rather than liquidate and just ping people out on exchange, on the new, DEX perps that are so popular with everyone. Like, yeah, because we're in this greater macro period of time that we are, ranging and building momentum while the government shakes out new guidelines that are going to be in crypto's favor. You expect, like you said, expect people to capitalize on the situation until they think that it's time to do otherwise and have the thing move up with earnest. I think you're going to see people capitalize on the scenario in the here and now, which is until the federal, the Federal Reserve changes the landscape of the market. They're going to play the ball as it lies, which is what we've had for the past however many months now.
That's true. By the way, you guys mentioned TradFi, muddy in the waters and whatnot. I think one of our buddies here, Centurion54X, he has a good question, and I think probably ties into this. At least I think it does. He says, with no quote-unquote blow-off top and no crazy alt season, if the top is in, big if, which, by the way, I think most of us here agree it's probably not, but if the top is in, do you guys think the downside will be less severe? Lots of money in Bitcoin instead of 70% down, maybe only 40 or 50%. Would you guys like to take first crack at this one?
I would generally say yes. I think BTC's downside will be more muted. I think as money comes in, your downside pressure goes down. I still think crypto is volatile, because of its nature. And I think this is barring any sort of like super turbo black swan situation, which is always possible. But I think traditional finance's interest in it is going to equate to more liquidity in it, which is going to equate to a more solved game, right? Like, we're not going to see BTC move in the next 4 years like it did its first 4 years of life, for example, right? Because there's more liquidity, it's heavier to move. And so I think that's going to be heavier to move to the downside as well. And so, yeah, I think you have a more muted drawback. And I think the 4-year cycle has happened to be a thing because it's been based around a very clockwork 4-year liquidity cycle that has been put on by the Federal Reserve and cooperated with by the U.S. government and corporations all over the place. And so, yeah, we're seeing that break down for a number of reasons. The past 3-4 year cycles with Bitcoin, we've had the same schedule of debt refinancing for the U.S. government, more or less. And now we're stretching things out. And so, and we're stretching things out after having injected all of the extra dollars that we did in 2020. And so, yeah, this cycle is coming out in a different pace, and what looked like a BTC 4-year cycle as a straightforward function. We can tie it to, the halving and speculate about supply if we want, but the reality is those are things that are really driving it, in my opinion. And so, yeah, that's my take. I hope that helps, Centurion.
Yeah, so because our good friend Centurion is a learned scholar, that 70% number he threw out there initially does come to us from the idea of maturing markets, which means as the bigger markets get a little bit older, more mature, more liquidity, more capital, more experience from the people inside of it, you're going to see less downside. You're also going to see less upside. So that's where that 70% number comes from, I'm guessing. The question, though, is like, if this is the top, because it's a shorter top, would it mean less downside? Yeah, I can see that argument for sure as well. At the same time, though, I think that there's actually a plethora of reasons why this might be a even more notable, less downside for the bear market. And you guys mentioned it earlier. TradFi is in this. TradFi does not like losing, especially with the amount of money that they've invested in this. There is a lot of incentive to ensure that these people who are very risk mitigation types do not want to see their portfolios drop that much. And even if they do, I believe they do have the wherewithal to understand not to actually realize those losses and instead use it as an opportunity to double down. So there's a lot of reasons that go into why we could see a reduced downside. I think TradFi is a big one. The overall maturation in the markets is a big one. And if you don't want to try to, I don't know, put TradFi in the negative light of like they're really going to like protect their hoard of gold. The other thing is that just the amount of money that's come in and the type of money that's come in beyond TradFi putting their own money in, which is that the retail investors of this cycle have been the ETF guys. And if you're someone that's been, getting in on the ETFs for your 401k, well, you really don't mess around with that until it's time you right off into the sunset, find a nice retirement community and actually start, realizing the gains that you made through your portfolio. So because of that, I think that the downside sell pressure is definitely mitigated this cycle as well due to the nature of the people that have gotten in through the ETFs. These are people that have a different mindset than the overall previous retail crypto investor who were time in cycles, trying to get in, trying to get out, trying to buy low, sell high, that kind of stuff. So I think the amount of reasons about why we're going to have a less down bear market, they just keep stacking up the further we go into this.
I don't know if the downside is going to kick in. I'm still in the caveat that it's going to be still more pain. So for the bulls, they're causing a lot of pain for us right now. Now, if they flip it and we pump back up, it's going to be more pain for the bears. I think this whole thing is going to cause, I think it's going to be like this, manipulated for quite a while. And I say quite a while, I think this is going to go into 2026. I wouldn't be surprised if you see Ethereum make a pullback all the way back up towards its all-time high, before end of the year. I could totally see that happen. Why? Because no one's talking about it. No one's really saying we're going to hit Ethereum's and go back to all-time highs, or Bitcoin make a stab at all-time highs. And that would be just enough to piss everybody up and just add more confusion, which makes me wonder, Zenith, where's our liquidation maps? Because I'd love to see what those look like currently. Because like I said,
this liquidation map.
Yeah, what do we got going on here? And is this as far? Can you zoom out more in time to see what more concentrations are at?
It's a drop down. So you were on a 24. Scroll up. Yeah, right there.
Let's do this, and then we go here, and we go. How about 3-day? You like 3-day? Wow, that's a lot of liquidity right at 96.8. Dang, that's a lot. Okay.
I just feel like when people start to get real cocky, and it's like a matter of fact, I try not to do that, because if I catch myself doing that, I'm like, okay, I need to take a step back, because I'm probably going to get burned. But when you start looking at that, so yeah, you start zooming out more, you start seeing, looks like there's a lot more liquidation going up than there is down, doesn't it?
It sure does.
And I just feel like people are piling on, and I feel like it's interesting. So if you push the market down, you feed into the narrative that the 4-year cycle is in, and everybody feels more comfortable. Now you start to put on more leverage to really try to push that thing down because you're feeling more and more confident. Well, all of a sudden then prices reverse, liquidating people out, and adds more, like I said, more confusion to the markets, more just constantly keeping you on your toes. Like, okay, which way are we going here? Like, I have no idea. We could dip down, we could rally back up, hit all-time highs again, and then we could dip some. We could just keep chopping sideways in these massive, movements going all the way into Q1 of 2026.
Yeah,
because think about it,
we hanging a month-long bull flag on the chart, right? While the U.S. waits to print more money, and we wait for Powell to step down, and we wait for rates to go, down even further. Crypto, just like you said, if you zoom out, it looks like it's ranging before a next leg up. But with us watching it every freaking week, it feels like a torture chamber, right?
Right.
Well, it's because we torture ourselves.
And to add more to what Dace is saying, so if we're going down that rabbit hole, institutions can accumulate more, they can liquidate more players, they can keep stacking their money, knowing what is coming, and that is more rate cuts, more bullish, scenario narratives playing out, potential QE coming. I mean, there's just, to me, that would bring the most max pain for a lot of people. And I keep thinking, what would be the most pain for institutions that, not institutions, sorry, the retailer. What would be the most? And to me, that would be it. Proving everybody's wrong. Oh, you're bullish? Bam, we're going to turn it to be bearish. Oh, you're bearish? Bam, we're going to make it bullish. They're going to just kind of keep manipulating it. And based on when those liquidation prices are, they're going to keep popping that up. And that's been the play. And for right now, there's no reason why, if this market, keep in mind, crypto market is very low compared now to the gold. What gold is still at, what, 30 trillion, maybe 28, I don't know, somewhere in that ballpark, right? It's a lot more than what crypto is. Very easy to move this crypto market around. And now TradFi's here, it's very easy. So I just keep going back to it. The big players are accumulating. They keep chopping it sideways, and then they will let this thing run when they're darn right ready to let it run. Hell, even some of the big guys on Wall Street were talking about that. If they had it their way, they would suppress the price down just to accumulate as much as they possibly can before they let it go. When I say let it go, I mean let it run to go to the upside. And then when no one's expecting it, then let it run and then make it crash again. I mean, TradFi this is their games. I just keep thinking this is what you got to prepare for. This isn't going to be, it's not an organic market. It's not an organic market anymore. You know, once you let those ETFs, spot ETFs come on, you brought a big player with a lot of liquidity to the market that can just push people around at will. So go ahead, Dave.
No, that's true. But you also, you know, you have to bear in mind when we look on chain about who's selling the most, it's not TradFi per se. It's Binance. It's when you're, you know, it's some of these centralized exchanges that are old crypto players that have bags from multiple cycles ago, right? They are using the new traditional finance liquidity to exit these very old, you know, or you know, really well appreciated positions. And so that's something to bear in mind as well. Along with they're using those old and large positions to, like you said, move the market to liquidate their customers and make money upon money. And so it's not all TradFi. You know, it's plenty of the traditional crypto people too, right? Instead of TradFi from Wall Street, there are like the old guard centralized exchanges, which Richard Hart always preaches, you know, against, saying, you know, these guys are the middlemen that you're trying to cut out. You know, that's what crypto was made, to cut out middlemen, not add them. And so I think Richard is publicly and very keenly aware that the centralized entities like Binance are some of the bigger leeches, not necessarily TradFi. I think TradFi has enabled, you know, some of these centralized crypto players to really sort of capitalize, quite literally, on the new blood that has entered the market as well. I think that's
true.
something to think about.
No, it's absolutely, Pooh. And you've been talking about it. We've been talking about it. And that is like the last push that we had down was Hyperliquid, Bybit, and Binance. Those were the three big liquidation areas that were pushing things down. And they not only did they take out their players, they took out, I mean, their customers who had straddles on, which means they had leverage on long positions and leverage on short positions. So you think, okay, hey, I'm good. All right, I'm good. I'm straddled. You know, if I go up, I go down, I'm going to make money. No big deal. But they didn't expect, what they didn't expect was when the price was going down, exacerbated quickly, they would, not only did they get liquidated to their longs, but then their short positions got closed out way too early. I mean, that's rigged. And I'm sorry, I've seen this play out with shorts and on puts and calls in the TradFi markets, definitely during the financial crisis. You saw it. And they started coming in and they would make rules saying, oh, you can't short the market. You're not allowed to short the market. Even though you know it's going to go down, you can't short it. They literally were making rules in a financial crisis. Oh, you can't short the market. So they just changed the rules to the game as they see fit. And central exchanges can do that right now because really they're ahead of the government and they can set every rules they want to. And if there was an investigation to that, that would probably be pretty alarming. But right now, no one's telling them they can't do it. So you know, they're going to keep doing it, which goes back to what I'm saying. They're going to keep pushing the prices around and liquidating customers. And like you said, they're sitting on a stacks of crypto where they can do it. And not only that, but they're taking their customers' crypto who's buying it and they're bringing liquid to their central exchanges and using that crypto and manipulating it too as well. So they have just endless supplies to push markets around. So yeah, the central exchanges or basically they are the banks.
Correct. I was going to say, not all old guard crypto entities are created equal, right? You've got, you know, Vitalik and the cypherpunk people, which Vitalik made an interesting announcement at some public thing about the privatization of Ethereum, which I think is a big deal. It's going to go hand in hand with traditional finance's adoption of it. But, you know, people like Richard, people like Vitalik who are interested in and have a vision of a use case for crypto that is different than and try to separate itself from the manipulation of all of these centralized entities. So yeah, it's
Well, the
a
true vision,
lot
the
of
true
activity.
vision of what crypto was. Yeah, the true vision. Yeah, you don't need anybody. You just need a platform to be able to send your funds from one address to another, and that should be sufficient.
True. By the way, you guys had some excellent data points you pulled up there. I don't know if you saw it. I flashed the Max Payne calculations right now. We're seeing averages somewhere around 108, 110 ish on Binance, OKX, and Deribit. So there you go, Tracker. Yet again, the theory. You're right on it. But I do have a data point of my own I'd like to bring up real quick. We are in some very unfamiliar territory. We are in extreme fear for the crypto fear and greed index. We're down at 11. We even spent 2 days down at 10, the 15th and 16th of November. The last time we were here was for a single day back when we hit, gosh, what was that, like $76,000 or $72,000 on Bitcoin during the tariff stuff back in February? And then if you want to go even further than that, getting down to this level on this indicator is very rare. But there have been some studies in the past that show that when it does get this low, if you're a person that is looking to do short-term trades, there usually is some sort of upside immediately after this. So yet another data point to maybe help pose the theory that, yeah, Tracker, if there's more pain that way, that makes sense. But if we also dip this low, dead cat bounce, slight recovery, also entirely possible. It seems like there's multiple theories that are kind of converging that like upside price potential is in play, but at the same time, though, nothing is guaranteed. I'm just saying this has been a pretty reliable indicator in the past. What do you guys think? Is the sentiment just like going too crazy now, or
You're
what?
definitely going to get a bounce. We're going to get a bounce. The $1 million question is what levels are going to bounce at. So we got to have to look at the fib levels to see where potential bounce could go. And then, of course, with that liquidation heat map you had, what were most of the liquidation at? Like, where was the most of the liquidation on that price chart you guys had?
I want to say 96 was the level on that. What
Yeah,
was
the
the time
one that
scale?
I'm talking about the one that's really zoomed out. Like, how far out does this one go? As far as like data, let me scroll down what you got here. Okay.
So I'm seeing 97 to mid 98 range. That's where most of it is currently. In the past, there was a good band that still remains there up at that like 105 level. There's one developing just above 100K. But
Well,
also,
just
if you just look at the size of this band right here, there's a lot in there too. So it's not just any single price point, but it's a good range that's building.
Right. So you can get up to like 98 area, but you would liquidate all those people. It's a lot of central exchange cheddar right there to gobble it all up if it wanted to go back up to 105.
That's
but
true.
Yeah, Max Payne. I think that's the narrative we got to keep looking at it from both sides, not just one side, but both.
That's fair. I do have one final narrative I want to run by you guys. We talked about it last week, and I think it's important to bring it up. And it's where we actually go to the charts themselves. Well, we have an official close on the weekly chart below the 50-week moving average. That's our darker blue line here. We've talked about this in the past, as this is traditionally the thing you stay above during the entirety of the bull run. Those people saying that we're already in that denial phase, this is one of those things that they're pointing at. Theoretically, this could be a top indicator, but I would argue you can argue against it for this cycle. I don't know if it's the strongest argument, but previously we just had the wick. Now we have a close. And as it stands right now, granted, we're like a day, 24 hours into this weekly candle, but at the same time, though, it's not looking super promising for recovery above that. Is this concerning to you guys?
I mean, it's a violent move down. It certainly is, but like what we talked about, I mean, these moves are pretty common. I mean, here's the thing: if let's just say you can't take this anymore, you want to get out, right? I would say more or less what, and I'm not in that camp, by the way, but I'm just saying if you get a bounce here and it goes up, like where would be the levels to probably undo your positions? Because you don't normally want to get out of your positions when it's going down like that. You typically wait for the bounce, because you're still going to get a strong bounce back, because there's two reasons why this happens. You have people that are speculating that they think it's going to go up, and you also have short covering. You have that going on. And that will cause the market to bounce back up and it rallies back. Typically a 50% retracement from the all-time highs to the lows is a rough estimate, but you only want to look at fib levels to get a better idea where that could bounce back up to. And then of course you could correlate that with those prices that we just talked about on the liquidation levels. So the way it works is whatever used to be resistance now becomes, whatever used to be support now becomes resistance. So you could see a bounce back up. It's hard to see. Let me zoom in here.
I don't even know if I'm doing these correctly. That's why we have Jay around. He's
But
the wizard.
if you were to, so think about it, if it were to bounce back up and get back to that blue line, you'd be at 102. But if it wanted to push up more to the 108 level, a little higher, where that has been like a point of control at the top area, where that 108 level would be, pushing maybe 109, enough to bounce up, liquidate people and people to do short covering and stuff, and then pushing it more down to the next leg down. You could get something like that, certainly. If you so tend to be bullish or bearish, I should say, that's probably what you'd want to do. If you wanted to get out, you say, I've had enough, I want to get out. That's what you'd want to do. You'd want to wait for this bounce and then start to unwind your positions if you're in that camp. Like I said, I'm not in that camp.
That's fair. Even just pulling the quick fib on this, that 886 level for going towards the downside is currently at $90,300. We're getting pretty close to that. And the way that the 86 works is that if we break that line, odds are we're going to continue the trend towards the downside. So we talked about it. There's a little bit of resistance right at that 90K level based on our time back in January, February, and a little bit of December before that. But since then, we really have not seen these levels before. So I'm going to be curious how it plays out. But as it stands right now, I think that this is one of the big narratives that I've been seeing on X, all sorts of financial discussions and stuff, which is that seems like people have really been waking up to the 50-week moving average. Well, now we hit it. Question is, are we going to recover? We'd have to recover back above $102,700 as it stands right now in order to get back above that. And we've only really wicked below it in the past. And even we did it during the tariff arguments back in April, a little bit. Twice we touched it on a wick back in August after the summer of chopping sideways. And then outside of that, we haven't touched it this market since we were back in the bear market where we were just breaking out of it. Back towards the top of 2021, between the double top, we had two wicks that went below it after the first top, but before the second top. So is it unprecedented? I would argue no. The reason that I would also argue that this one is also not super unprecedented is because the way that the market's been moving, again, I go back, which is we've really not gone parabolic. This entire market, it's kind of just been like stepping up chunks at a time and then moving sideways, then go up another chunk. When you have that, the moving averages do behave differently just based on the data that's coming in. So because we have not gone parabolic, I would argue that if this was a slightly different market and had a slightly different shape to it, that 50-week moving average would be a little bit lower. I'm not saying we wouldn't have completely never touched the thing, but I'm just saying that is an argument I can see people making, and it makes sense. I'm not going to say it's the strongest one because we do still have to operate in the market that we currently are in, which is this one where we did cross that boundary. But at the same time, I understand how you can point to this market, the way it's behaving, and realize that the traditional indicators of the past are not going to be working. Like Pi cycle top indicator, if that truly is the top, that thing did not even get close to hitting. And a lot of the other stuff like the MVRVZ score, again, it relies on quick acceleration and price, did not even get close to hitting as well. So could this be a top signal? Yeah, sure, it could have been. But at the same time, I'm like, you asked me the question earlier, am I bullish or bearish? I'm still bullish. And this is how I justify that decision, which is I look at the data, I look at how the data works and what's going on with it. So that's the best argument I can make against this as the top signal. And is it a bit crunchy in the data science side of things? Yeah, it is. But at the same time, I'm a bit of a nerd, so I feel like everybody knew what they were expecting when they came in here. Does this worry you guys? Does that make sense? Or
the reason why I was asking you guys are more bullish or bearish now. No, it does. It does. It does. I just think that I was asking you guys if you're bullish or bearish. Like, so let's just say let's say October was really good and we were moving up like everybody thought, and then November was going on. I would be getting a lot more bearish and thinking that, yeah, I think the 4-year cycle is absolutely going to kick in because people are going to be selling these. Now that it's caught some people in the camp where, yeah, I think the 4-year cycle was there, but I thought we were going to have a blow off top, and everyone's just in there waiting, and we really haven't done anything. So I think, like I said, it's just out more mixed signals for everybody. This whole thing has gotten really choppy and mixed signals, just enough to mess with everybody.
I mean, it can stay choppy and miserable for a long time, but I don't think that we're going a lot lower. When you look at the fear and greed, and you look at the heat map, I mean, there's not a lot of legs further down to go. So, in my mind, it's kind of easier to be bullish on a day that is literally historic low of sentiment, and we're sitting here sharing our daily sentiment. So it's always important to remember that like time is something that's hard for us to factor into. Also, we could wake up tomorrow and there's a crater on the chart and Dace looks a little silly, but so I'm not saying that it's not possible, but when you look at the historics, when you look at the greater macro picture, yeah, I think we keep, like I said, printing what in a few years, when you zoom out, could look like a bull flag lasting months while crypto gets digested into the U.S. stock market and adopted. But yeah, right now it's not a good time. That's for sure. It's a wild time to watch things because, like I said, you've got a lot of dynamics, whether it's centralized crypto exchanges, TradFi, offering new products, new ETFs getting approved, new features getting approved, the government buying or not, it's a very unique time for crypto in general. Like I said, along with a delayed U.S. government debt rollover, which has stretched out lots of metrics, whether it's the Bitcoin cycle or the, speculation linked to manufacturing, things like that.
Very true. Tell you what, folks, if you want even more of this, I do apologize. We did reference the Telegram a good bit today, partly because there's so much good stuff inside of it, but also that is where we do spend a lot of our time. So if you guys are interested in catching that information, by the way, you can head on over to our website, which is walktheblockndf.com. You can find our membership tab, and that is where you can meet up, hang out with us, and get in on all the exclusive live streams, the good chat, and all the excellent links that we send out through there. I'd like to say the waters get rough, so don't sail through them alone. Come join us as we navigate digital finance together. Private mentorship, exclusive live streams, Q&As. Go from beginner to intermediate to expert with us. Alrighty. Gentlemen, that pretty much about does it for our show this evening. Any final thoughts before we get out of here?
Thank you guys all so much for joining us. Turian, Mood Pilled. Thank you all for hitting us up in the chat. All the Ninja Watchers, thank you all for participating. Have a good night.
That's true. Tracker, any words of wisdom or a message of hope before we get out of here?
Expect more of this to happen. Expect more choppiness, whiplash action going on. I think it's going to keep going like this for a little while. I think there's more upside. The reason why I'm saying bullish or bearish. Typically, when you get hard pullbacks like this, the more bullish you should be getting. The more upside you get, the more bearish you should be getting. I know it sounds, the complete opposite, but that's exactly the mindset you need to have actually. So there's more risk. I think there's less risk to the downside right here and more risk to the upside. And the people that are putting on leverage to put on those shorts, central exchanges are licking their chops right now. And I think they've got enough people in there that are sucked into the 4-year cycle ending, and they're going to push it back up and they're going to liquidate them, whether or not the 4-year cycle's in or not. I think people need to stop thinking about the 4-year cycle and start thinking about how this crypto market is now correlated heavily with TradFi, and it's going to be treated as a risk on asset. And as rate cuts keep coming and we get more aggressive with more cheaper money, and companies are going to have more money to start spending on riskier assets, I think that's going to tee us up for 2026. How long do we go in 2026? I don't know, but that's kind of the take. I'm still going to stay in the camp.
I like
that's all
it.
I got, man.
I guess if I had a message there, I would be saying that I think the only thing that's different between week to week that we've seen is that the price has changed. A lot of the fundamentals that we've been talking about have not changed. If anything, they've actually gotten a little more solid because we're actually seeing the things that we wanted to see materialize. The only difference is that price is not moving the way that everyone was hoping to. So does it mean that it's over? I happen to think not. Then again, nothing we say here is financial advice. And you got to make those decisions for yourself. Whether you're a long-term investor, someone that's actually, getting in on that open interest market and making some longs and shorts. If you are, Godspeed to you. That is not us, but Godspeed to you again. Outside of that, though, there's a lot of noise on X and across the mainstream media right now. We're not going to have a full answer until we actually watch it play out. Until then, there is still risk involved in this, but at the same time, we're here for the volatility. We're not scared by it. We're here for it. We understand that. We understood that getting into it. So, folks, keep a
No,
level
sorry.
head
One
on
more
it.
thing. One more thing. Please do not
Do it.
leverage. Please do not put any leverage on. Please, God, do not put any leverage on. I don't care if you're bullish, bearish, you're trying to put. Don't do it. It's a rigged game. That's all I'm going to say.
That's fair. That's very fair, and I feel like we've seen that play out for multiple weeks in a row here. It didn't go well. I'm referencing the day that we had $19 billion wiped off the other markets there. So yeah, it was a rough one. Outside of that, though, ladies and gentlemen, thank you so much for joining us. We will catch you guys next time, where hopefully we have some good news for you. But either way, we are still going to be back here on Monday nights, 8 p.m. Eastern time, and we look forward to seeing you all then. Thank you so much for joining us tonight. We'll catch you guys next time. Good night.